Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, November 5th. We got a bit of economic news release scheduled for today, so we'll start with the weekly jobless claims. Remember, this week is jobs numbers we're looking at. So last week we had 260,000 people apply for unemployment. Forecast is supposed to be in that same range at 263, and it jumped all the way up to 276. So obviously not good numbers right there. In terms of jobs, obviously we don't like seeing more people apply for unemployment. Productivity for the third quarter, we had 3.5%. We're figured to be contract in the third quarter, and actually still showed expansion at 1.6%. So good numbers on productivity, better than what we expected. And unit costs also not quite what we expected, but better after contraction in the previous quarter at negative 1.8. Forecast supposed to go up to 2.1, and it came in at 1.4. So basically, it's telling us that we're not really having any wage inflation, at least in the third quarter, in there. And we did have uptick in productivity, so productivity is still looking pretty good there. Remember, tomorrow we got the Bureau of Labor Statistics coming in tomorrow. We'll touch base on that. Some thoughts on there. Right now, the stock market's a little mixed. It did start the morning off down. And primarily, even though we had some stocks like Facebook and Ralph Lauren, some of these companies that posted good earnings after hours yesterday. But right now, it's just the concern. We got everybody's kind of pulling back, and what they're looking at, where their holdings are pulling back because of what the job numbers tomorrow. They're kind of waiting to see what we're going to come in at, and if it's a good jobs numbers, there's a very good chance they'll probably even raise the chance of the Fed raising rates in December. If it comes in below expectation, which if it's like a sub 200 and even lower than what the expectation is, which particularly I think that's kind of where we will end up, because it's been subpar. Up until July, we were getting 200+ thousand jobs per month, and the last couple of months we've been getting right around under 140, around 140-ish range. So I do think we will potentially be probably in that same mix in October, as I don't really anticipate seeing any increase in jobs in the third quarter here. So if that happens, we may see stock market money go back in there. The last jobs report, when they came out with it, there was a big run up in the stock market, and I could kind of expect to see the same thing, which could, as a result, we'll look at here, the bond market, it could pull back too. The last support we had is based around the 103.28%, and right now we're about 103.53 range right now. So we got some room to drop further before we can hit a floor of support. So it's probably a good time to really be locking in now. If you are floating your interest rates out there, a good time to lock in, as rates could, as you can see, we have a downward trend. And if anything, we could go down a little bit further before we see any possibility of going upwards here. All right, folks. Sorry to bring on the bad news for interest rates. Stock market, again, probably will rebound a little bit once we get the job numbers tomorrow. But that may be at the cost of having better rates. Okay. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care. Bye-bye.